How to run payroll. Before running payroll, make sure you have added your service and product commissions and set up your employees. If you need help, click the I in the upper right-hand corner to view other payroll videos. To start, go to Utilities. Click on Payroll. Click Add New. Set your start and end dates. The dates you select will determine the pay period for all employees. Click Continue. Your payroll will generate according to the time clock and sales commission data. Choose the employee to view with the drop-down at the top. If you would like to view a breakdown of the commission calculations, click on the Commission Details button. Summary will show the commission totals. Detail will show a breakdown of each service and product sold and the commission earned. We will go back to payroll. The employee's income will populate based on what you have set under the Payroll tab on their employee file. You will see salary, hours, and wage information, as well as product and service sales commission. To the right, you will see what the employee is being paid based on their calculated earnings. Hours will be automatically calculated based on employee time clock entries. You can also manually edit the employee's hours worked only if you don't use the time clock. Encore shows hours in decimal format here. For example, 42.58 hours in decimal format would be approximately 42 hours and 35 minutes. If you need to add a one-time adjustment to an employee's payroll, add it here. For example, you can add an adjustment for stat holiday pay. You would calculate the amount yourself, and then add it as an adjustment here. Select if the adjustment is a dollar amount or a percentage. Set if it is an addition or subtraction. Set the amount of the adjustment. Under Before/After Taxes, there are options to change when the adjustment will be applied. Before tax applies the adjustment before taxes and deductions are calculated, which means it will affect the amount of tax and deductions withheld from the paycheck. There are two types of after-tax adjustments, net pay and gross pay. Both are applied after taxes and deductions have been calculated, so they do not affect the amount of tax or deductions withheld from the paycheck. A net pay adjustment skips gross earnings entirely and is added to or deducted from the employee's final take-home pay after all payroll calculations are complete. A gross pay adjustment changes an employee's gross earnings, but does not affect taxes or deductions, so the adjustment is included in their net pay. If vacation is checked, vacation pay earned will be calculated including this adjustment. Click Save when done. At the bottom, you will see the Delete button. Use this to delete a pay period. This will delete the payroll calculations for everyone. This can be used if you selected the wrong dates by mistake or want to go back and redo a past pay period. The Recalculate button can be used to reload sales and time clock data. For example, if you create a pay period from the 16th to the 31st of the month, but today's date is the 30th, you would need to come back after the business day is over on the 31st, and click Recalculate to reload sales and time clock entries for all employees from the 31st. If you have made changes to one employee's payroll settings, select Current Employee to only recalculate the employee you have currently selected. Reload adjustments will clear any manual adjustments added in the Adjustments area. Click Recalculate. Any manual changes you made will be cleared. Next, go to the Taxes and Deductions tab. Here, you will be able to view the tax and deduction information for the employee. The Calculated Taxes and Deductions section displays the amounts that should be withheld based on the employee's claim code set in the employee's screen. These amounts are based on the tax data that the government provides each year. If you have checked off Remit Social Security or Medicare, or EI and CPP for Canadians, you will see deductions calculated here. You can adjust this setting in the employee screen under Payroll Setup, Taxes and Deductions. If you need to modify an employee's deductions, you can do so under Actual Taxes and Deductions. To deduct additional tax, set values here. Scroll down to Final Calculations. This section gives you a breakdown of the employee's final pay. It starts with gross pay, which is the employee's earnings before any deductions. Next is total deductions, which includes items like taxes and other payroll deductions. These are subtracted from the gross pay to calculate the net pay. If there are any after-tax adjustments, they are added to the net pay. If the employee has received an advance, that amount is deducted here. The final total is the amount payable, the amount the employee will receive for this pay period. Once you have finished payroll for each employee, click Post. Once you post a pay period, it can no longer be edited. Make sure everything is correct before posting. You can click Print to print or download employee pay stubs. Use the email button to send pay stubs to your employees. Lastly, we will go over the system options for payroll. Click on System. Go to Payroll. Set the calculation method to determine payroll taxes. Method A, payroll, only takes into account the employee's earning in the current payroll period to project their annual earnings for determining how much tax they should pay. This method is susceptible to large variations in pay, but the setup does not need to be as exact. The tax numbers from this method will be in line with reading the numbers from a tax table. Method B, payroll, looks at the employee's total year-to-date earnings to project their annual earnings for determining how much tax they should pay. This method is more accurate, with tax amounts almost to the penny of their end-of-year tax assessment, but the setup must be done correctly. This method allows the employee to keep more money instead of receiving more later as a tax refund. If your location requires a separate county tax, enable that here. Next, click on the Employee tab. Go to Payroll Settings. The first option, Commission, is clawed back on refund, allows you to deduct any commission an employee earned from a sale if that sale is later refunded. The second option, Disable adjusting prior pay period, prevents older payroll runs from being recalculated when changes are made to invoices or time clock entries. Check this off if you do not want future pay periods to be affected by changes made to employee time clock hours or sales. We have now finished going over how to run payroll. Thanks for watching.